afternoon. This is All About Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network, a collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. And I'm your host, Christine Lee, taking a look at our top stories. MicroStrategy, the business intelligence firm known for holding its main treasury reserve in Bitcoin, is now paying some of its board of directors in BTC. In an SEC filing today, MicroStrategy saying that from April 11th onward, non-employee directors on its board will receive all fees for their service in Bitcoin instead of cash, citing the board's commitment to Bitcoin. Meanwhile, Michael Novogratz's Galaxy Digital filing for a Bitcoin ETF with the U.S. Securities and Exchange Commission. So far, 8 companies await SEC approval, but the regulator has rejected dozens of applications over the years. The tide may change now that Canada has approved 3 Bitcoin ETFs, one of which Galaxy serves as sub-advisor with $190 million in assets since launching last month. And Bitcoin's share of total cryptocurrency market value has fallen to its lowest level in 2 years after strong rallies from some of the industry's biggest altcoins, including XRP and Binance Coin. Bitcoin's market dominance has dropped to about 55%, the lowest since April of 2019, according to crypto research firms such as Messari and CoinGecko. That's down from about 70% at the start of the year. Checking in on Bitcoin, the XBX Bitcoin price right now trading just below $60,000. It's still up about 15 basis points over the past 24 hours, according to trade block data. The XBX has been the most reliable Bitcoin reference price for institutions since 2014, with billions in assets under management benchmarked against it. And analysts say one reason for Bitcoin's bounce today is the hotly anticipated Coinbase direct listing on the NASDAQ on April 14th that has the crypto industry abuzz. Joining us now to discuss is Gus Coldebella, General Counsel and Chief Policy Officer at Paradigm. Welcome, Gus. All right, I think you're muted, Gus. But while we wait, Paradigm is a prominent crypto investment firm. Paradigm is headed by Fred Ehrsam, one of the co-founders of Coinbase. Your investment portfolio includes Coinbase, which now has a $100 billion valuation. In your view, is Coinbase worth that much, perhaps even more?
Christine, first of all, it's good to be with you today. And obviously, it's not a meeting until someone doesn't come off mute in time.
That's right.
Thanks for having me on. We are big believers in Coinbase, and one of the reasons that we're excited about the Crypto Council for Innovation and Coinbase as one of the founding members of that is because Coinbase's direct listing is bringing massive amounts of public attention on our crypto ecosystem.
That's right. Coinbase has made some impressive progress amid Bitcoin's surge over the past year. We have a chart up, in the first quarter revenue, they reported $1.8 billion versus $1.3 billion for all of 2020. In the first quarter of this year, net income was at $730 million versus $322 million for all of 2020. Q1 adjusted EBITDA of the year, $1.1 billion versus $527 million for all of 2020, and monthly transacting users of 6.1 million versus 2.8 million for all of 2020. These are huge gains, but is there any concern that, Coinbase as a stock might trade like Bitcoin and be as volatile?
Well, I am not a stock analyst, but I think the numbers that you point out, and this graphic is really incredible at showing what a mainstream inflection point we are at in crypto. I think 10 years ago, even 5 years ago, crypto was about far-sighted hobbyists who were engaged in Bitcoin and then later ETH trading. And now crypto has hit the public consciousness. Mm-hmm. We have major financial institutions, including one of our members, Fidelity, and you just talked about Mike Novogratz's firm filing applications for ETFs. Mm-hmm. Bitcoin has hit an all-time high, and we even have crypto art on the front page of the Wall Street Journal, which means that we are at this mainstream inflection point where ordinary people are focusing on crypto and its promise.
hmm You know, while Paradigm was an early Coinbase investor, now it is also making big investments into decentralized finance projects. Is DeFi the next Coinbase? Is it the next growth story on the horizon? What investment areas is Paradigm looking to get into, and what is most exciting right now?
Well, I think DeFi is one of the many examples of what crypto can do for ordinary people. Uh, and if you look at the ability of crypto to provide jobs and opportunity, to enhance people's personal privacy, to take intermediaries out of the equation, and to allow people uh, to enter into productive economic relationships with others that they don't even know. Really, crypto is the one technology that allows you to do that.
hmm
And if we're at the point where the public is focused on DeFi, focused on Coinbase, focused on NFTs, with crypto art on the front page of the Wall Street Journal, uh, we're very excited about telling crypto's story to ordinary people around the world and to governments and to regulators around the world. So we take advantage of this moment to make sure we have sound crypto regulation.
hmm You know, Paradigm is also an investor in Diem, formerly the Facebook-led Libra project. We just caught wind that the executive vice president of the Diem Association, Dante Disparte, left to join Circle, a stablecoin issuer, and Diem's competitor. You used to be the chief legal officer at Circle. So is this sort of a death knell for Diem?
Oh, I don't think so. But uh, I tweeted my congratulations to both Jeremy at Circle and to Dante. Obviously, I've worked with both of them for many years. And I think to have two great regulatory thinkers under the same roof is very powerful. Dante and Jeremy and Circle will be able to really move the needle for crypto.
All right. Last week, we learned that Fidelity, Square, Coinbase, and Paradigm are among the tech titans forming a crypto trade group to lobby and educate policymakers on the digital asset space. The Crypto Council for Innovation, as you mentioned earlier, aims to shape the way Bitcoin and other cryptocurrencies are regulated. So what are your top priorities, and where is the United States falling most behind?
Well, yeah, the Fidelity Square and Coinbase and Paradigm are very excited to launch CCI, which we did last Tuesday. Uh, these organizations are serious about regulation, serious about getting regulation right, and serious about the promise of crypto. I mean, I think what animates this group is that we all believe that crypto is an internet-sized opportunity and it's going to be the most important technology in the next 20 to 30 years. So if you have, as we were discussing before, Christine, the attention of the world on crypto, but you also have a lot of misimpressions about crypto, what we need as an industry, as a community, is an organization that can tell our story, because if we don't talk about the advantages of crypto, then others will write the story for us. And that's really the purpose of Council for Innovation.
All right. You know, there are other crypto trade groups like Blockchain Association and the Global Blockchain Business Council that have formed and been lobbying on DC and talking to policymakers. So what effect do you think a trade group with huge names like Fidelity, Square, and Coinbase will have on those other trade groups?
Well, I think what we're dealing with here is a worldwide issue, right? Because crypto is borderless. And therefore, while the U.S. is incredibly important, and I want to get back to your question about what the U.S. is doing in crypto in a moment, but while the U.S. is very important, we're also interested in making sure that people across the world have the ability to engage in the jobs and opportunity, the personal privacy gains, the other gains that crypto will allow them to do. So one difference between Crypto Council for Innovation and the other groups that exist is that we have a worldwide footprint. And the other is that we are all about education. It's important not just for regulators in the US to know the promise of crypto, but for people in the US and across the world to understand the needle moving possibilities that this technology can bring. Mm-hmm. So where we think we're going very quickly here is Crypto Council for Innovation is going to be able to convene regulators from around the world, bring everybody around the same table. It may be a Zoom table, but the same table, to get everybody the same facts about the importance of this new technology. And that's our recipe for making sure that regulation is both that helps technology to grow and satisfies the interests of these global regulators.
Gus, you've got a massive job ahead of you. Good luck, and thank you for joining us this afternoon.
It was a real pleasure. Thank you so much.
Right, that was Gus Coldebella, General Counsel and Chief Policy Officer at Paradigm. Coming up, BTC Markets Analysis with Forex Global Head of Market Research, Matt Weller.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Welcome back. Bitcoin miners are holding onto their earned Bitcoin more than they are selling them, according to this chart by Glassnode. You can see the return to accumulation mode marked by those green columns observed since March 31st, almost 4 months following largely negative readings represented by the columns in red, showing miners decreasing positions and taking profits. This is a bullish signal as, first of all, it hints that miners are generally feeling optimistic about Bitcoin's price, and second of all, it means that fewer new Bitcoins are hitting the market, removing some of that selling pressure. And joining us now to discuss is Forex Global Head of Market Research, Matt Weller. Welcome, Matt.
Hey, Christine. Thanks for having me.
Great to have you. All right, Matt. So we're seeing miners holding onto their Bitcoin at a time when the hash rate is at all-time highs and the mining difficulty is also increasing. So what does this mean for Bitcoin?
Well, essentially, I think you did a great job summarizing it. It means there's less Bitcoin hitting the market. So that's less selling pressure, while at the same time, with mining difficulty, with the hash rate hitting new all-time highs, that tells us that the network is more secure, more powerful, more trusted than it ever has been before. And that's also been accompanied by the highest transaction volume that we've ever seen in the recent weeks. So it really is the fundamentals of the blockchain supporting Bitcoin, the token, have never been stronger. And that's certainly a bullish sign that's been reflected in price.
Matt, we also have a chart on the Bitcoin hash rate that you sent us. This is the total combined computational power that is being used to mine and process transactions on Bitcoin's proof of work blockchain. It's climbing to record highs. That is proving to be profitable for miners, isn't it?
Absolutely. I didn't send this chart along, but if you were to pull a chart of miner profitability, that is also at all-time highs and essentially off the chart. So it's really a bullish sign for the infrastructure, the underlying pieces that support the entire Bitcoin ecosystem.
Mm-hmm. We also have a chart on net transfer volume of Bitcoin from and to exchanges, and that appears to be going down. Why are we seeing that?
Yeah, this is a great chart. This is, I believe, a 30-day average, so it's filtering out some of the day-to-day fluctuations, but it essentially shows that Bitcoin is moving off of exchanges. And the way to think about this is essentially a hot wallet, cold wallet kind of dichotomy, where people who keep their crypto assets, including Bitcoin, on an exchange generally want the potential to sell that Bitcoin. So it could be seen as Bitcoin on exchanges being slightly weaker holders, someone who could conceivably, with little friction, sell their Bitcoin. What we're seeing now is that a lot of that volume is moving off of exchanges to cold wallets, to any number of different sort of less liquid venues. And to me, that indicates that these people are not necessarily looking to sell their Bitcoin anytime soon. This is something that they intend to hold for an extended period. And much like you noted with the miners holding onto their Bitcoin, it again just shows decreasing supply hitting the market, which all else equal is a bullish sign for price.
Okay, Matt, we also have the Bitcoin to US dollar weekly chart. We see that BTC is going up. I wonder, what is your near-term and long-term outlook on Bitcoin?
Sure. Well, we don't do explicit price targets, but what I wanted to highlight in this chart is actually in the subgraph, where that essentially plots the 13-week historical volatility. A lot of traders and investors perhaps are concerned that Bitcoin's essentially stalled out over the last 7 or 8 weeks. We haven't seen much upside momentum. Perhaps some have speculated that this is the sign that the big bull market we've seen from the low below 3,000 up to above 60,000 could be a major top. And I think one piece of evidence that I'm watching is this historical volatility in that subchart. So you'll notice at the two previous peaks that we saw back in 2014 and 2018, the realized volatility over the previous quarter was substantially higher. If we actually do see a top, and we certainly can't say that we haven't, but if we do see that, it would be at the lowest realized volatility that we have ever seen in the history of Bitcoin. So to me, that's another potentially bullish sign that we're not seeing that blow off top. We're not seeing traders get too far ahead of themselves, and that this might just be a healthy consolidation within the context of a longer term bull trend.
All right, Matt, thank you so much for your analysis on BTC.
Hey, my pleasure. Thanks, Christine.
That was Forex Global Head of Market Research, Matt Weller. And that's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.